Every billion-dollar company you know today started the exact moment an entrepreneur decided to step up and solve a simple problem. Great ideas exist everywhere, but actually executing them is rare. Success requires moving past the idea phase and into the real world. Think of your business idea as a destination on a map. To reach it, you need a vehicle, the business itself. Looking at this blueprint, we see a flashing empty fuel gauge. To move the vehicle toward your destination, you need fuel. In business, that fuel is capital. Inside the engine, this fuel allows you to buy inventory, hire employees, market products, and expand operations. Without understanding how to acquire and manage this capital, even the best business ideas can fail before the journey really begins. Most entrepreneurs start by using their own money. This is called bootstrapping, where you use personal savings to fill the tank. This approach allows you to maintain complete control. You remain the sole owner of the vehicle and make every decision. However, bootstrapping often means a slower journey. It requires working long hours and reinvesting every dollar you earn to keep the car moving. When you need more capital than savings can provide, you might turn to a bank loan. This gives you a large infusion of fuel today to help you grow. Loans come with a specific cost. You receive funding now, but agree to repay it over time with added interest. This creates a unique risk. As shown, if the business struggles or stops moving, loan payments continue relentlessly until the tank is empty. Borrowing keeps you in the driver's seat, but creates pressure to ensure the business generates enough value to cover the debt. Some companies aim to dominate entire industries almost overnight. They are looking for hypergrowth. To reach that speed, they look for venture capital. These firms invest millions into startups, providing fuel without requiring monthly loan payments. This involves a major trade-off. In exchange for the capital, you sell a percentage of your company to the investors. Now, you share the seats. Because investors own part of the company, they have a direct say in your direction. Because they take high risks, they expect enormous returns. This pushes the speedometer into the red zone, creating intense pressure to scale rapidly. Modern technology has also opened alternative routes, like crowdfunding, where thousands of supporters provide small drops of fuel to help launch a product. Partnering with investors removes the burden of monthly debt, but it changes who holds the power over the company's future. Every funding decision shapes the future of a company. The best method is the one that aligns with your specific goals. As this chart shows, you are always balancing 3 points. Bootstrapping offers total control, but moves slowly. Debt preserves ownership, but increases financial risk. Equity provides massive speed, but shares your decision-making power. Ultimately, capital is just a tool. Even a full tank of fuel won't help if the vehicle isn't built to solve a real problem. Building a successful empire requires creating lasting value, maintaining daily discipline, and staying committed to the journey over many years. The empire you build depends on the fuel you choose, and the journey begins the moment you decide to start.